Hi there, everyone, and welcome into this week's market update. Now, don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Alrighty, let's start with the XJO as we normally do. Okay, at the moment, well, right at the close, we've seen a bit of a pullback after a reaction to the RBA announcement where they've lifted another 25 basis points to 3.35. Now, I'll come back to the details around that in a moment, but basically we've sold down just back to around this 75 level again. You can see that the market's hugged this level for quite a few weeks. It's like a magnet for our market. It can't stay above it for a very long period of time. It can't stay below it. So this is your key reflection level. This is where the battle's sort of happening right now between the bulls and the bears. Okay. For the moment, it's not very clear who's going to win, right? Our market is definitely overbought. When we scroll out, we can see, there's about 8% movement there. Big move, guys. Usually those types of moves do get a bit of a pullback of sorts. Now, it reminds me of the move back here where we double topped out and sold off. This had a lot of negative sort of sentiment around the sell down. Whereas now, well, I don't know how negative it really is out there, guys. I actually feel still a little bit more positive for the moment anyway. But yeah, that can shift on a dime, right? Like that can change very quickly. So, I'm not going to hang my head on that bullish sentiment just yet. That's for sure. It's kind of like a week by week proposition. But nonetheless, technically, we either need to have a breather here, a prolonged sideways period, or a little bit of a pullback. Okay, I think we could do something similar to back here, where we have a small dip, another rally up, try and test the all-time high, and then have a reasonable sell-off. That's kind of my gut feeling, right? We're coming into reporting season this week. Usually, report through the reporting season times, we sort of a bit sort of sideways to bullish more than anything. That'll come down to how good or bad a lot of the company earnings come through. If we see some good earnings for the rest of this week and next, we'll see CBA on the 15th, which is next week. Then, we could definitely go test that all-time high. If the earnings are a bit on the weak side, well, we'll probably pull back pretty quickly. But regardless, the seasonal pattern around this time of year is kind of sideways to bullish in Feb, bit of a pullback through the div season, then sort of sideways through April, March, April, bit sort of sideways to slightly up. May's usually met with a bit of a pullback, and then you rally sort of, around sort of June, July, August. There's usually a decent rally around there somewhere. So the way things are lining up at the moment, I'd say we'll play out something similar to that. I think we'll stay sort of up here around this 75 level through the reporting season, give or take, 50, 100 points either side of that. And then, we should have a reasonable pullback to the mean, right? Which could be this early uptrend line around 72, or it could be the 200-day average, right? I think one of those two is where we'll target sort of those levels around early March sometime, late Feb. Once we conclude the reporting season and we start seeing a lot of stocks go ex-dividend and things like that. All right, so that's kind of where things are at technically and from a seasonal point of view. S&P 500 still to me looks quite bullish. Okay, we've broken the downtrend line. They had a much heavier sell down than what we did. The market's looking a bit oversold overall. If we think this is the top for interest rates or getting close to the top of interest rates, right? And we'll talk about that dynamic a bit more in a minute. But just purely technically, we've broken out to the upside of that pennant. We've got an upward little channel happening here at the moment. We've pulled back. We saw buying come off the uptrend line here overnight. Buying come off that old resistance level that's become support. To me, that is all looking very, very bullish. If we see a bullish signal in here tonight, then I say we're going to continue on this trend. Okay, so technically that's looking quite bullish to me. And then also keeping an eye on the NASDAQ chart, similar sort of story over there where, in the growth space where the downtrend's broken. Okay, there's new uptrend in play, higher peaks, higher troughs. We're well above the 200-day average now. It leaped a bit quickly, given it back, and looks like it's coming into test trend again. So what we're looking for here is just to keep reconfirming this trend. If we just continue this trend, continue reconfirming it, it's a nice angle, right? It's fairly steep. And it says to me with the triple bottom across there that there's still ways to go, and we could even get to this upper resistance level that we tested sort of middle of last year. Okay, so I think a similar move here, right, back up to around that level is on the cards for the next month or so. We've had some mixed reporting out of this space, but overall, considering how much some of these stocks have sold down, I think the reporting season's still reasonable, right? When you actually go and have a look at Amazon, okay, on the chart, I can quickly forgive them, right, for reporting badly, considering, how much the stock's fallen, okay, over the past year. So, still be happy to sort of consider buying down here, guys, right? Because I expect them to have sort of weak or weaker earnings and outlooks in this environment of higher interest rates. But at what point do you say it's priced in? Well, the point where the downtrend breaks for me. And that's what I'm looking for here, guys. Okay. You had a very strong pullback. But basically, everyone talks about this pullback, right? It just gave back the gains that had going into the reporting, right? That's all it did. Now it's bouncing off trend. Keep an eye on this space, guys. If you get a bullish signal here, well, the growth space has probably got a bit more in it, right? Especially here in the short term. Okay, so technicals are looking bullish, guys, in the US. Now, I could change my tune very quickly after tonight when Jay Powell talks. Okay, Fed chair, he has the power to change this space around very quickly, right? One speech and this turns bearish. Okay, so and this is the environment we're in. We're in a reactive market, although we're starting to see signs of a bullish market coming back in the US, and that should lead our growth space higher. What our banks do and what our value stocks do will come down to China, will come down to data, will come down to commodity price, and come down to a lot of things. But when you're looking at sort of our discretionary and growth space in our market, well, that's going to take leads from here. Okay, things like Amazon and the Nasdaq. Okay, that's what you've got to be looking at the moment. All right, so let's talk fundamentals a bit more. So RBA lifted rates today as expected by 25 points. No surprise here at all. If anything, I was expecting them to be a little bit more hawkish in their announcement. Okay, I don't think they really changed the language too much compared to other previous meetings. It was interesting that when they talked about inflation, they talked about it internationally first, because when you look at it from an international point of view, most other countries out there, their CPI is coming back down again, well, the larger Western countries anyway. So especially looking at the US, for instance, yes, inflation's still very high, but it seems to have topped for the moment in the US. Whereas our inflation, our CPI number came in very hot in January for the December period. So, it was a bit mixed for me there because, yes, he did talk about our inflation coming up, but he also talked about internationally. And for me, if I'm thinking internationally, well, I'm thinking things have perhaps topped out for the moment. But it's still too early to call, guys. Way too early to call. We're still way above that 2-3% target, 2-2.5% target that the central banks of the world want. So for now, we've kind of got to still be a little bit concerned about this. I think with energy prices coming off, that's going to ease the burden out there, but it's not going to solve the problem. So I think what we're seeing now is that first initial pullback in inflation. I think that's going to continue for a little while, though, right? I think for the next few months, at least in the US, we'll see CPI coming in and easing with the ease of the energy prices. Now, what happens after that, though? What happens when that does finish its cycle of easing and other inflationary pressures are still in place? And that's where I think the danger is for the market this year, okay, where we can see some sizable pullbacks this year is when the market goes, oh, hang on a second, we've still got an inflation problem. This inflation problem is going to be around for a few years. Locally here, I think we're just sort of, we've got our own few little problems here, obviously, with storms and things and disruptions and stuff like that to food supplies. And I think that'll all clear up and we'll find that energy and food prices will also see our CPI prices come down or CPI readings come down in the coming months. I reckon we're lagging behind what's happening overseas. We have lagged behind this whole time. Our inflation didn't pop as quickly, and it's still coming up now. I think we're a couple, 2, 3 months behind what's happening overseas. That's my opinion, right? We'll soon find out as the coming months roll on and we see more CPI readings. The initial reaction to the RBA announcement today was negative. We wiped off 50 points of our market within 10 minutes or so. It's pretty quick. But we held 75. Okay, so that's pretty key. I actually personally think the market could shrug this off, depending on what Jay Powell says tonight in his speech. If Jerome Powell just says the same stuff he's been saying every other month about soft landings and inflation coming down and showing good signs of this, and he's been pretty positive, right, recently. He keeps talking about rates going up further and staying up for longer, but he's been very, very positive. So I think that's going to dictate what happens next for our market as well. If the US is up tonight, we'll probably just hold 75. Okay. If the US starts coming off, though, we've got a bigger reason to fall now. Okay. So Jerome Powell tonight, 4:40 a.m. in the morning. So a fair bit before our market opens, we'll get the chance to see what the US reacts to that, because that's about halfway through their trading session. And then, we'll then sort of go from there, really. There's not a lot of news this week, guys. We'll see a lot of the Fed members talk. Jay Powell's probably the head speaker there that I'll want to be listening to. That's what the market's going to be mainly listening to anyway. So, Jerome Powell's key tonight. After that, it's pretty quiet until Wednesday next week, where we'll have US CPI. If that CPI reading once again comes in as expected or lower, then we're looking good. Looking at this stage, you're expecting core CPI in the US to come down to 5.5% from 5.7, and then headline to come from 6.5 down to 6.2 year on year. All right, so they're expecting another slight decrease in CPI over there at the moment. And then even looking at the UK, which also is going to release CPI on Thursday. Wednesday morning for the US, okay, and then Wednesday night for the UK. Even there, they're expecting they're actually expecting inflation to stay at 10.5%, and a small decrease in core down from 6.3 to 6.2, right? Look, at this stage, that's really key, isn't it, right? So, what we've got to keep asking ourselves is, are interest rates actually topping out? Okay, are we going to find the top of the interest rate cycle in the next 2 to 3 months? Okay, if so, then the current theme of buying towards the Nasdaq will continue, right? Yes, we'll have pullbacks in between, but that will continue. But something changed from Friday, guys. Okay, there's definitely something sort of happening out there in that bond space that we can't ignore. Okay, we saw a big kick up in the US 10-year, and that hasn't happened since early Jan when the rally began. So if that continues to rally after Jerome Powell's speech tonight, I suspect we're going to have a reasonable pullback over the next coming weeks. So just be wary. Although I am a bit more bullish overall still at the moment, markets are a bit overdone. Okay, in the short term, we've seen a pretty big rally for January, and all it's going to take is some kind of catalyst to see a pullback happen. Don't think we're going to give back all of Jan's gains, though. I think we are going to maintain some form of uptrend in our market and in the US. But you can't ignore the big move up in yields in the US and in Australia here. Okay, so if that continues and persists for the rest of the week, then that's your bearish case, guys, right? That's where things can really turn around on its head pretty quickly, and we might see sort of a 5% pullback in the US, 6% pullback easily, right? It's just some profit taking needs to come in at some point, right? And this is a good excuse. Jerome Powell, I think, could either sort of spark that off a bit further, right? So the job numbers on Friday in the US sparked it. Jerome Powell's comments will either put fuel on that fire, okay, or he'll throw some water on it. One of the two, and we'll find that out tonight. And I think a lot of investors are sort of waiting to get a bit of an update after Friday's strong job numbers on what Jerome Powell's really thinking about here. If he starts hinting to more interest rate hikes, which I don't think he will, markets will come off. What I think it will say is, look, inflation's coming off. That's a good sign. We're going towards a soft landing. Job numbers are really strong, which means soft landing is doable here, and that's going to be a really good message, right? That's what I think he's going to do, and see. Let's just see what he says, right? I don't think off the back of one strong jobs announcement, he's going to turn super hawkish. Okay, he's already hawkish. I don't think he's going to turn into a super hawk. I think he's just going to just to stay on message for a while, right? Which means one or two more small rate hikes compared to what we saw last year, and then he's going to have to hold them up there for a while, right? And that's his message. It's been his message for a few months now. Rates are going to have to stay high for a while until inflation comes down. Don't worry about where we're lifting them to. Worry about how long we have to keep them up there, right? That seems to be the message, which says front loading is over. Interest rates are going to stay high for a while until we see inflation come back down, below 4% or below 3% or whatever they're going to start wanting to come down to before they start dropping rates again. I can't see them dropping rates for a while, but I'd be happy if they just left them alone for a bit as well. And I think the market will be happy if they just leave them alone for a bit. Okay, we'll get a nice sort of continued rally up for maybe even for a good half a year there, right? Look, that's where we're at. We're still talking about interest rates, guys. The biggest change for me is last year I thought we're going to head toward, or the US is going to head towards a hard landing. I'm not seeing it. Right? What we're seeing is everything to suggest the better case scenario at the moment, which is inflation coming down with a soft landing, and that's the current theme. Is that theme going to continue? Yes or no? We'll find the answer out to that over the next few sessions. But, that's what you're going to be asking yourself week on week. What's the current theme? Are we worried about interest rates going up and inflation not coming down? If so, we're selling off. If we think inflation's coming off and we're going towards a soft landing, the buying's going to continue. And that's where the market's going to swap around between those types of themes, depending on the data, depending on the way the Fed talks, depending on the way central banks of the world are talking and what inflation's looking like. So that's what we've got to keep an eye on. Okay, technicals are bullish right now. Okay, but I'd be buying the dips until the trend breaks. That's what I'm looking at the moment. But warning signs, guys, alarm bells are ringing out there with that bond market. So just be careful, be ready, have your finger on the trigger. This is a trading market, guys. Okay. For me, you either set and forget for the next 5 years. This will all resolve eventually, or you're trading this. And you're trading it on a daily and weekly basis, keeping an eye on what's happening. All right. That's kind of where you're at. All right. That's it, guys. So a bit of a long-winded video today, but a bit of action happening in that bond space and in that central bank space. Once we're past that, really, like I said, the CPI is the next big thing next week. And then we don't really hear from, we're not going to get another Fed or RBA announcement for a while. We've got a lot of it behind us for the time being. Okay, so once you get that behind you, we're kind of set for a bit, right? I think it's towards the end of March. It's 2 seconds. Or was it early March? My apologies. Just waiting for this to load. Yep, so I was right the first time, 22nd of March, towards the end of March is the next Fed announcement, right? So we're still looking 6 to 7 weeks away. So there's plenty of time. So yeah, once we hear from the Fed members this week, things will probably go quiet on that front until the CPI, and after that, we'll just hear a few speeches here or there, right? Market will then focus on what's important, okay? And that's all other little bits of data, and we'll just get back onto a theme and a trend. All right, I'll leave it there. Thanks for listening in. Take care, and bye for now.